This is a Stock Trading Reality Podcast, episode 122.
I didn't have a ton of shares, but I was up about maybe $20,000 off of a $4,000 or $5,000 investment. The long story short, over the course of that, I think I broke even barely, or maybe lost a little bit of money, but
this is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. He finds parking garages very intense. Play trader.
I don't know what it is, but my most recent experience with it was when I had to, take my wife to the hospital because, I dropped her out up front, but then I had to go park the car in the parking garage. And it was really exponentially increased because here I am in a parking garage trying to hurry up and park, and my wife was already going into labor, and we'll get to that, I'm sure, at some point down the road, in a fun fact. But I do not like parking garages, and then when wives are in labor, it just adds to the intensity. But even if the wife and, my wife was not in labor, I don't like them. The parking spots are like 3 inches wide, and they got the low ceilings, and I'm not claustrophobic, maybe just when it comes to parking garages, but it's an intense experience to be driving and trying to find a spot, and then some cars are sticking out way too far, so now you got to swivel, and I'm just not that good of a driver in the first place, so you throw in all the tightness of a parking garage, and things get intense in my world. But Ches, you seem to be probably a lot more even-keeled when it comes to this sort of stuff, so I'm assuming that you don't have any problems with parking garages. But with that being said, do you at least understand kind of my perspective? Because they are pretty tight, right? I mean, the spaces and all that sort of stuff.
Yes, I completely understand. And remember, for context, while you lived in Michigan, I lived in downtown Chicago. So driving around with nutty, crazy people and parallel parking and parking garages, I'm well versed in it. However, since we moved to Colorado, the only real mall that's close to us has a huge parking structure. And since we got a new car, it is the most dreaded thing I ever do. I drop Kelly off at the door, and then I go find like an empty floor of the parking thing because the spaces, like you said, are so tight, and everybody who doesn't care about their car just smacks it into my nice car. So, yes, I just try to hide from everybody. We're still in the stage of this car ownership where I park extremely far away from everyone because I don't trust a single soul.
I never thought about that, but that would make sense because it's kind of a twofold. You can be in my camp or yours where you don't want to be with all the bozos that are like, well, whatever, and they just,
Yeah, I got a 12-year-old pickup truck. I don't care whose car I hit climbing into it.
Yeah, that's true. But I'm a big fan of finding and that's usually what I do. I'll just keep driving up and up and up, and then, okay, there we go. Now there's some space to breathe. But, that's...
So you're not
Chicago,
completely alone. In Chicago, I dealt with that all the time.
Yeah, you were just. I can only imagine. So that makes me feel a little bit better. So we'll just move on here and talk about our guest today, Ben. He's in the chat room a little bit as he discussed at the early part of the interview, but he has been around a while and he's got a really interesting journey. And afterwards, I still won't disclose it, but Ches and I learned some cool things about him. He sent us some interesting pictures, but if you see him in the chat room, you can ask about that, and I'll put that ball in his court. But he's a super interesting guy, and it makes that much more sense when you kind of understand more of the context of his story. But he went through a lot in terms of kind of learning and then questioning. I'm still a little skeptical, but after he started to kind of take the proper steps and just, slow down and go about things, in more so a logical and, just step-by-step manner, things started to turn around for him, and, things have been, going well. Like us all, still has room for improvement, but a good, interesting story, and one that, if you listen, there's going to be stuff in there that you can take and apply to your trading, or maybe apply to your preparation to start trading. But there's lots of good stuff, with the interview. So with that, let's get started and hear from Ben and all about his journey. Ben, welcome to the show.
It's good to be here.
Now, we, in the spirit of always keeping things as real as possible, I'm not sure really much about your background. Now, you sent me an email, and then I asked, and you obliged, so thank you very much. But are you in the chat room much? If so, what is the alias that you use in the chat room?
I haven't been in the chat room much lately. My alias is BenArtM, BenArtM, and it's probably been a few months, honestly, just with the dreaded W word and other things going on with life. So lately I haven't been. I was back last spring in the summer some.
Okay, yes. The screen name, honestly, it does ring a bell to me. Ches, does that sound familiar to you? Ben, yeah.
Yeah,
okay.
Yeah. I used to try to pronounce it and like slap all the letters together, but then I just realized it's probably easier just to keep him as Ben. Yeah. So yes, I have seen him before.
So we're definitely we're going to call you Ben, not your alias, because then it's just going to be me Ben RT.
It's not really a word. So
yeah. Well, thank you for defending me. Yeah. So I would be stumbling because it's not even a word.
Well, now I feel better.
Exactly.
Yeah.
Perfect. So again, thank you, Ben, for hanging out, and we'll see where all this takes us. But where did the market start for you? You know, where did you hear about it? What got you interested enough to, want to get a little bit more hands-on with it? So let's just start kind of at the beginning of everything for you.
Sure. My dad is very involved in just economics, trying to understand and know macro, microeconomics. He, from a young age, he instilled in us just the importance of saving money, of making sure that you're accounting for where your money goes. And he's just a very wise, intelligent man. And, I look up to him a lot, and he kind of forged that idea of being a good steward of your money ever since I was little. So he would invest his money, usually just mutual funds. He didn't do any active trading or anything like that. But it was always the principle of you need to be saving money, you need to be investing money, putting money away so that you are taking care of yourself down the road. It's not the government or anybody else's responsibility to take care of you. It's your responsibility to take care of yourself as best you can. And so that was kind of where that foundation started. And for me, when I started, with a real job sort of, and actually earning money, it was mainly just long-term investments, retirement funds, mutual funds, IRA type investments. So
now what actually, so don't get me wrong here, most people, that's kind of their introduction to the market. However, you already have a solid background in terms of, just what's been instilled about kind of money, and, you're going to need to really take care of yourself. Don't expect, I always make this joke all the time. When I get to Social Security age, I fully expect it doesn't even exist at that point. So I need to save up everything and just expect that doesn't ever come. But regardless of that, obviously with that kind of background and that kind of mentality going through life, what was it that actually made you take the flip from being more so a passive investment for retirement type trader to you want to get more active in it, where you have more control and essentially you're making the decisions? Did something happen, or did you just start reading up on stock opportunities and thought this might be a good way to kind of speed that up, or how did that go?
Right, that's a good question. I spent 12 and a half years in the military, just got out about a year and a half ago. And
thank you for your service.
You're welcome. It's an honor to be able to serve, and I look back on it with great memories, and just glad to be able to do that. But in the military,
what branch? Sorry to cut you off.
No, that's fine.
I'm always fascinated by military people. So, what branch?
I was in the Army.
Nice.
So, I started off in 2003, and did a couple different jobs, and then got out around November 2015, and just kind of. My wife and I decided it's the best choice for our family was just to make our family kind of the priority, and kind of walked away without any retirement or anything, kind of taking a leap of faith. But it was one of those decisions I don't look back on with regrets. It was a good decision. It's kind of helped my kids, my relationship with my wife, and everything else. So
awesome. So I think I kind of sidetracked you, but you were in the military. You got out. And you've been out for about a year, so yeah.
Well, back up a little bit. Before I got out, this was 2007. I was overseas. I was single, had plenty of disposable income, and I don't know if it was just talking to some guys who were already trading while they were deployed, because the stock market opens kind of in the afternoon time for with the 8-hour time difference, and so you can kind of follow it in the evenings and such. So I got interested in it in that regard, and thought, I could probably do at least as well as the folks I'm sending my money off to manage it. And it was just more one of those things where I had extra disposable income that I could try to invest. And so my timing of getting into the market was probably not ideal because it was late fall 2007, early 2008. And things, I didn't really put a ton of money into it, but it, obviously when all the housing stuff fell apart and the stock market kind of was stumbling there a bit, and that was my entrance into more so the active trading, although it was mainly just kind of swing trading. You would say it was more like short-term investing, I guess.
Okay, so you're over there, and is it one of those things where you kind of like look over your buddy's shoulder, hey, what are you doing? And then they explain, or was it just more so you're having conversations, and then in conversation they bring up, oh yeah, so I'm trying to trade, insert ticker symbol. I mean, how exactly from your buddies, was it noticing, or was it just literally them talking to you like you should actually understand what they're talking about?
Yeah, there was probably a little bit of that, of them kind of saying, hey, this is what I'm doing. I remember one guy in particular was real big into penny stocks, and he was trying to push that. I remember him using that terminology, and I didn't really understand too much about it at that point. But I don't know if I was using any of his picks or the things that he was investing in. I was trying to stick with things that I knew. So I remember I was trading Visa, Citibank. There might have been a couple others, but they're all well-known companies. I think in talking to somebody, about investing, they said, well, always invest in a company that you can believe in. And this was, again, the mindset of more of a long-term investment, not necessarily a trading standpoint.
Right. So your first forte was not, I'm going to be some short intraday scalper that wants to buy and hold for 15 minutes at most. You were still thinking longer term, and that's good for you for not. You brought up memories about me at work and when I was in penny stocks, and here I am talking about guys at work about the next opportunity in this penny stock, and it's just like, oh, you idiot, Clay, just.
Well, the story gets worse, so
yeah, please tell them.
Give me any congratulations. So anyways, again, I invested in a few things. 2008 rolls around, and the stock market is kind of going down. Most of my investments, I actually made a little bit of money, but then over time did not end up doing anything but probably breaking even. I don't remember what it was. And there was only one or two that I actually took a loss on. And, again, it was a couple $100. It wasn't anything thousands of dollars where I invested tons of money into this, kind of single cash cow, and it didn't pan out. But at that point, I was kind of like, okay, I tried it out, didn't work out. My timing was bad. This isn't a good idea. Let's just let somebody else manage it. Later that year is when, 2008, I met my wife and we started dating, and got married in 2009. It was more of one of those things where I need to be a little bit more cautious now. I have a wife I need to take care of. I can't just be throwing money around willy-nilly and stuff.
Yeah, the days of bachelorhood and disposable income, kind of that whole realization that, oh wow, now somebody else is dependent on me and relying on me, and I want to be able to take care of them. Yeah, it can definitely change how, I guess, speculative you're going to be with your money after that. So you said did you go and find a financial planner or something, or go put your money back in IRAs and different mutual funds and stuff like that?
Yes, ever since I've been in the military, I've had USAA, and I do most of my business with them. Just an excellent company all around, banking, investments, whatever you want to do. They don't have the best rates in terms of trading fees and all of those things. So I don't.
They never do.
Well, and to be fair to them, they're not a trading brokerage. They're like a military bank, essentially, right?
Essentially, you have to have some kind of connection to the military to get in with them. But I've never had a company that has better customer service. And from my personal experience, I'll stick with them kind of to the day I die for more of my IRA type stuff, long-term investments, just because they do an excellent job of just taking care of military members, especially, and they kind of understand that community. So I kind of switched a lot of my investments over to those just IRA stuff. For those of you not familiar with the military, when you're in the military, they have a program called the TSP, which is the Thrift Savings Plan. And it's like a 401k, but the government doesn't contribute anything. It's just up to you to contribute. And you can just put a percentage in of your income, of your base pay, of any kind of special pay, whatever you want to do. And again, going back to the principles that my dad taught me ever since I was first enlisted in the military in 2003, I had done this TSP. And so when I got out, I was able to roll over all of that money into kind of stick with those long-term investments. So that was kind of my focus at that point. But as we were approaching getting out of the military, this was 2015 in the summer, at a new duty station with some new folks, and they were into investing, and they weren't. Well, I shouldn't even say investing. They were into trading, but they weren't even into penny stocks. They were into the sub penny stocks and things that were just, in hindsight, like, what are you thinking? This is not just a bad choice. This is a really bad choice.
That's a great quote. I like that.
And I didn't really know enough to be able to kind of like, I guess, just run away from it. So I was intrigued, kind of got back into it. Our housing arrangement was...
What intrigued you?
I think just the speculation that, hey, if something goes from 1 cent to 2 cent, you're making a lot of money. Or if it goes from, they were talking like 0.0001 to, 0.0002 kind of thing. And, or maybe it was...
Oh, you just doubled your money and it only moved one tick.
So things like that. And
who was they? Your friends or
like a couple of guys I knew in the military. And so I'm trying to remember exactly how it all transpired now, but I started looking into more of the active trading. We were in the transition period of getting ready to get out of the military, and so our lease was up. We were staying with my parents, and so up in the DC area is kind of our last duty station. And our housing allowance was substantially higher than anywhere else we've ever lived, just due to the cost of living up there. And so we kind of had some disposable income at this point. And as I was thinking about, hey, we need to save this up in preparation for getting out of the military, I said, I don't want to just save it, and get 0.02% in a savings account. I want to do something with it in some type of short-term arrangement. And so I started, between them talking and just kind of having a little bit more money to put towards that, I wanted to kind of do something to try to grow that amount of money. So I did dabble in a couple of those sub penny stocks and was just like, a few dollars here and there. Thankfully, it was, I lost, I don't know, $100, $200. It was something that wasn't significant. And the more that I looked into that, I was like, I kind of just self-realized that this is not a good idea. This is just a really bad idea. So I wish I could...
Why such a bad idea? You looked into it, you realized it was a really bad idea. And I'm pressing you on this because there's people out there that I guarantee you totally just related to them. They're thinking the same thing. Wow, I can only spend $100 and I can double my money if it goes from 0.001 to 0.00. I mean, you summarized exactly why it's so intriguing. But what exactly did you discover, which sounds like in a quick amount of time, that's just like, not only is this a bad idea, but a really bad idea. So, dig a little bit more in.
Yeah, what turned you off specifically?
I remember just thinking, like, looking into these companies and trying to find out some other background about them and trying to see what they were really made of. I remember one in particular that it wasn't necessarily a sub penny, but it was a penny stock, and I had caught it at the end of a pump, and it was up in the dollar range, and so I bought maybe $1,500 worth of this stock. I don't remember how many shares it was, if it was 1,500, but it was around that around that investment of $1,500, and in a week's time, it had gone down to like 50 cents a share, or maybe even lower than that. And, it was one of those things, like, if that can happen with, just this other penny stock, and I had looked into the company a little bit, I don't even remember what it was now, I'd have to go back and see, but thinking that, hey, this place is somewhat, at least they sound somewhat substantial, but, some of these other companies that just looking into what they have on their websites or the background about them, what they're offering doesn't really seem like something that's just going to take off overnight. There's a lot of hype behind it, I guess. And, I don't know. I can't remember one thing specifically that turned me off other than just kind of getting maybe just a bad feeling about, like, this isn't such a good idea.
Yeah, he almost had a premonition, and honestly, Ben, I could tell you if you started looking into their financial sheets and see that this company has like $57 cash on hand, you'd probably be like, okay, this is run out of somebody's garage and might not be as promising or worth as much as, say, the stock says it is, even if it's only $1. But honestly, that's Clay, I want you to weigh in on this. It's almost like he had, and this is it cuts both ways. Having a bad feeling about something can usually be a really good indicator that maybe you need to at least reevaluate it. But at the same time, if you have a bad feeling about a trade, but your trade plan is logical, you might just be acting emotionally. So I don't know. Clay, you want to weigh in on that?
I mean, that's a good point because especially in penny stocks, the context, what Ben is describing, and I think it's a common theme, but it seems like these military guys always have good instincts. So I will say to you as a listener, if you have any military service and you're thinking about getting into the markets, especially penny stocks, just listen to your gut instincts. If something seems a little off, if something seems a little, go with that instinct, because you have good instincts. I don't know if that's just what the training, grinds into you or what, but listen to your instincts, especially, in penny stocks. But yeah, it's the catch-22 when you get into trading. Sometimes that's where the emotions come in and you almost don't want to listen to your instincts because things can, go array there. But, with, when you know how to structure a trade plan and all that sort of stuff, nothing's ever perfect, but, that can be avoided. But yeah, it's not shocking, Ben, that you can't really put your thumb on exactly what was bad, but you just had a general overall thing of, some just seems off. And for me personally, I had that feeling too, but I just didn't listen to it. I mean, Clay, am I really going to get rich on this muffler penny stock company? And for you newer listeners, yeah, my penny stock experience is basically as bad as it gets. I lost a bunch of money on a muffler company. Like, at least some people
wasn't it a self-cleaning muffler?
No, it was just like stainless
crazy?
Steel. No, it wasn't even that exciting. No, right. It was pitiful. So,
again, the story kind of still unfolds a little bit more, so don't give me too much credit yet. 'Cause I've got plenty more poor decisions that I've made. But I remember for one of these companies in particular, I looked it up on Google. I just found their address, I Googled their address, and did the Street View thing. And it's it's a 2-lane highway out in the middle of Tennessee, and there's like a metal building that looks like it's been abandoned for a few years. So there's some things that you can do that just kind of let you see maybe what's behind the curtain a little bit. But again, I did dabble in a few of those penny stocks, sub penny stocks, and it was just, I found myself, just kind of putting my toe in the water, and I kept just losing money. And it was one of those things, just like, hey, if I'm going to lose money, why keep going down this road? I need to find something else. So
I realize you say it with such confidence, Ben, like, well, duh, but Chevs and I come across quite a few people where it's like, why do you keep doing that? Why do you keep doing that? Why do you keep doing that? And they just, the definition of insanity, doing the same thing over and over again and expecting a different result. You say it like, well, duh, if it doesn't work, then done, look into it, analyze the situation, and move on. But
yeah, and I don't know if it was that obvious at the time. That's probably more of just my hindsight kind of kicking in.
Well, it was obvious, and I'll tell you how I know that, because you just kept dipping your toe into the water. You acting in that way of dipping your toe in shows that there was something in the back of your mind that was like, I don't know what it is, but just some people, they just go full bore, and you're like, yeah,
they go bigger, yeah. They go home and they push the envelope on something that doesn't actually work. So while I totally agree with Clay, it was obvious to you. It might not have seemed as obvious as it is now, obviously talking in hindsight, but you still picked up on it, and you never said, okay, I'm really going in here, we're going to make a bunch of money for my wife and family and stuff like that, and it's just going to work in this penny stock. I don't know why, but it's going to work. You never had that thought. You never made that trade. I'm hoping, unless the story changes, but it sounds like we said, you kind of recognized it and had like a good gut instinct that, I shouldn't be going large in this stuff. This isn't, dabbling is a great way to put it. There's nothing wrong with dabbling, because there's no other way to really kind of find out if it works for you or not.
Yeah, and that's kind of where I was, is just trying to see maybe if it did work out. If it's one of those things where it did work out, I mean, I probably would have put some more money into it, but I kept kind of getting shut down and didn't really see like it seemed like it was going anywhere. And one of the things that I would say, for folks that are listening is the guys that in my unit that I was talking to in the military, they were big in like the Yahoo message board stuff. And I would say that's the worst place to like spend any amount of time trying to get any kind of information about anything, stocks or otherwise. So I found myself going to these places thinking I'm getting good information and having people, kind of being honest and telling you, really what they think, and for the most part it was just a lot of hot air that was just kind of repeated over and over again. But in hindsight, I do have to give credit that Yahoo message board is where I first came across a link to one of Clay's videos. So even through that, somehow it got me back to something that made a little bit more sense.
Yeah, it's it's definitely a catch-22. I mean, and that's why, I mean, Ches and I, yeah, sure, we always sit here and rail against, message boards and social media, but it's not, message boards, they're just a tool. If you know how to use them, if you know how to navigate them right, I mean, they are just like a chart. They are just like level twos. They are just like a balance sheet. They can be used as a tool, but again, to your credit, you just notice a lot of hot air on the message boards and said over and over again. And, but a lot of people, if you believe it, then you're just gonna have to learn the hard way that, the hot air just burned you. So,
so I would say that kind of to continue the story, the next step was, again, I'm kind of trolling some of these message boards trying to find something that I could put money into. And, how I came across your video was I started trading AVXL. And I remember you did a lot of videos in the fall, like kind of late summer, fall of 2015 on AVXL. And it was one of those penny stocks that just kind of kept going up and up. And, I think I first bought it when it was 50 cents or something a share. And I kind of got in at a good time. And, I actually made some money off of it in the fall to the point where I didn't have a ton of shares, but I was up about maybe $20,000 off of a $4,000 or $5,000 investment over the course of that fall. Again, this is kind of October 2015. And we were getting ready to move and get out of the military. And so I had just kind of been leveraging that position. Whenever it would, dip down, I would buy a few more shares. And then I came across your video of, if you're not sure whether to buy or sell, what do you do? And here's an idea, sell half of it. And so I wasn't necessarily selling half of my position, but I started selling off after it would, I would make some money and then use that to kind of reinvest. And in hindsight, looking back at it, I was unknowingly kind of playing off of just how it was reacting, even to kind of some of the chart and technical analysis stuff. I just happened to be, I guess, fortunate to hit it at the right time. And there was a few times I lost a little bit of money, but that AVXL did pretty well in the fall of 2015 up until about November. And then the sad part of the story is late October rolls around and we're in the process of moving. I've got a million things I'm thinking about, not really focusing on any of the trading. And the week that we drove from Maryland down to Alabama was when it kind of hit, I think, about $14 a share, and then just kind of nosedive from that point on. And I keep thinking, hey, it's going to bounce back. It's going to bounce back. Again, going to these message boards, people are saying, oh, it's legit. Keep the faith. Don't give up. Go long, go strong. Whatever. All those stupid things that people say to try to, keep. And I think some of them are legitimate. Some of them actually believe in what they're doing and what they're buying, but kind of ended up staying in it. Tried to use that to leverage my position and get more shares, but ended up buying several times, and then it went down a few more times. So the long story short, over the course of that, I think I broke even barely, or maybe lost a little bit of money. But looking back and thinking at one point being up, maybe around $20,000, and thinking that would be a nice little pool of money to kind of help us as we kind of transition to civilian life. Again, I was back down to basically where I started from. Yeah, and to defend you, because I know people, how could you let $20,000 disappear? Well, keep in mind the context of the situation, and this is why trading in and of itself is not easy, is difficult. I mean, he was used to go, and I totally remember AVXL. That thing was an absolute monster. It would go up, it would pull back, go up, pull back, go up, pull back, and it just do it over and over and over again. And it was just the chart, everything about it was just go up, pull back, and people get used to that. It pulls back and then it goes up. So when it starts to pull back, it's rational to think that, hey, it'll go back up because it's done that the past several times. But there's more to trading than that. There's a reason why there needs to be mechanisms put into trade plans and such that are not going to make you the perfect trader, but it's also going to serve as insurance policies, but to not allow a 20,000 profit go down to a break even. So at least good for you for having a break even. But and in hindsight, Ben, I'm sure you know exactly what I'm talking about in terms of things you could have done now. But that's just when you don't know what you don't know.
it's totally logical to just keep buying something when it falls and falls and falls because, well, it's gone up in the past, so it'll for sure go up again. And before you know it, and the crazy thing is, a lot of people wouldn't be in Ben's shoes. They would have watched that $20,000 actually turn into a loss. So, don't think that Ben's some moron because he kept buying. You got to remember the context. Up until that point, it had just kept going up and up. So, but there's more to trading than just finding a stock that goes up and pulls back, and then all you do is just buy when it falls apart. Because if it falls apart, truly, it's not going to be a pretty sight. So yeah, thank you for sharing that because that's a fantastic real life story of just how, now psychologically, you seem like a very humble guy, so this maybe it wasn't you, but did you were you feeling pretty good about yourself? Did you think you had the whole trading thing figured out? Like, I'm going to be, rolling in the dough, or did you kind of stay humble about it throughout the whole thing? Because, let's be honest, being up $20,000, I can see that affecting some people's maybe ego, maybe their thoughts about how good they are as a trader, or did you not really experience any of that?
Yeah, so I remember at the time being somewhat surprised that I had done this well, and, I wasn't really sure what to attribute it to. I kind of, when I was talking to my wife about it, remember saying I don't really know what I'm doing necessarily, but I'm just grateful that we're doing this well. I was kind of hopeful that it would keep going this well, and I was even thinking of it as something. I was really just looking at it as a short term. I just wanted something to invest my money in for 6 months or so, kind of give us a little bit of money to help us as we transition out of the military until we kind of figured out what we were doing next, because we really didn't have a solid plan about what our life was going to look like. So we had this money, but I remember feeling like, hey, this is just I don't really have a solid grasp on what I'm doing. I felt it was more just like dumb luck at that point, and I still looked at the stock market as just this casino of some sorts, and I happened to be kind of at a hot table and was doing well, but I don't really being able to remember to attribute it to, my skills or abilities. I guess thought it was more just dumb luck.
Well, very nice. I would, Ches, would you agree? I think he's probably in the minority of guests. Most people, and I'd throw myself in that category, think, oh, they got it all figured out. It's not dumb luck. It's a skill, and that's what what we call fool's gold. But it sounds like Ben's not alone in that camp, but I can't remember the last guest that attributed everything to dumb luck and not attributing it to fool's gold.
I do remember feeling a little bit of confidence growing as I was just watching, like you said, the patterns of that. That was the only ticker symbol I was trading at the time, and it was it would have the run, then would pull back, and so there was, I think, a little bit of kind of confidence or feeling like maybe I've got this one figured out. And that was, I probably was a little bit overconfident when that big pullback happened. And that's, like you said, you think it's just going to turn right back around. It's just a little pullback, and then you're going to be good, and things are going to be, smooth sailing again. So I would say there probably was some of that, maybe confidence or overconfidence that was kind of, I guess, seeping in or maybe affecting my decision making on when I started selling or pulling out.
But I think, most of the time, a trader's biggest enemy is himself. It's his fear, it's his greed, it's his ego, it's all this stuff. And honestly, don't get me wrong, if you live with self-doubt all of your life, that's a pretty crummy way to live. However, a healthy dose of self-doubt and possibly realizing, like you said, I might not actually know as much as I actually know. These are good things that can, for especially from an education standpoint, lead you to at least try to learn more. So in my opinion, that's, while it might have been cloudy during, those times when you were doing great and buying pullbacks that never kind of went back up. It's still a good thing to kind of realize that it's possibly just dumb luck, and it's good to kind of keep you in check.
Yeah, good point there, Ches. Now, Ben, as far as where things went from here. So you're up 20,000. It sort of affected your ego. That was a great talk on psychology there. But in the spirit of keeping things moving, you broke even on AVXL. So take us from this point in your journey.
Yeah, well, I didn't even break even at that moment. I was still holding it I held it on for, I don't know, another 6 months or so.
Oh.
And so I had gotten in I had a good portion of my shares were under $1 a share, even after the reverse split or whatever they had done. So I had a good I guess, position in terms of it would have been, I would have had to go a long way down to lose everything that I had to not even break even. So I wasn't even making a good decision of getting out at some point. I was just kind of letting it ride, hoping it was going to come back. So, that's why I was saying, be careful about giving me too much credit here too soon. But in the meantime, like I said, I stumbled onto your videos about AVXL, and so I would just kind of look at the free stuff that was on the webpage and was intrigued by the candlesticks. I started looking up the candlesticks and trying to figure those out, and just being really interested in just the basic robotic trading stuff of the support resistance levels, just the different candlesticks, and kind of understanding just price action for a set period of time. And so I was at this point, financially, I didn't have like a full-time job. My wife and I are, it's still kind of our goal to start a small farm down here where we are in Alabama. But I was trying to live off of some of the income that we had saved up over the course of the remaining time in the military. I hadn't put all of that into AVXL. I hadn't put all that into trading. So we were trying to make it through on that. And I kept thinking to myself, hey, there's something to this. I was still kind of skeptical of there's no way it can work out as good as they claim. And but I was intrigued nonetheless to kind of keep going. And at some point, maybe it was March or so of last year, I bought Robotic Trading and the membership, the annual membership, just to try to kind of see where the rabbit hole went.
Okay, so you finally took that leap of faith, and I guess how did it go from there? Were you still trading while you checked out the community and went through the course, or did you completely stop trading? What was your plan of attack, if you will, from okay, I just literally put my money where my mouth is in terms of trying to stay serious by purchasing this subscription, purchasing this training course. So what was the steps from that point forward?
Yeah, we didn't have a whole lot of money kind of set aside. So at that point, I remember trying to view a lot of the videos and kind of get as much information as I could. And I think we had, in the transition between getting out of the military and transferring our money from this TSP account into an IRA account, the IRA accounts, most investment firms, they don't really know what to do with money that you invested while you were overseas. And I had my TSP set up ever since I was in the military in the beginning. And so I had about 30 months of contributions that were from deployed time. So it was tax exempt, tax free. So when you roll that stuff over, you have the option of cashing it out. And so I ended up cashing a portion of this TSP account out. Part of it was to kind of just pay for some living expenses that we had and some renovations that we had done to our house. And then also part of it I set aside, I think it was $3,000 to use towards investing. And I started off just with a cash account. I hadn't gone back to USAA. I ended up, just looking at their fees and everything. I said, if I'm going to do active trading, I've got to do some of the platform. And, I think from some of the videos that you've done, where you just kind of compare platforms, and maybe even from the chat room, just kind of landed on Thinkorswim and liked that, and thought that it was pretty reasonable for what you got. And still, use that today. I still kind of just stick with that just for the amount of trading that I do.
And obviously that's, a great point, because if you're going to be super active about it, reducing your fees is absolutely imperative, because if you're paying $15 a round trip, $10 a round trip, that's going to eat at your profits really quickly. Here's the other thing. We'll tie it into RD's podcast. Even if you have really low rates like $3 a trade or $1.50 a trade, if you're making 50, 70 trades a day for small ticks here and there, me and RD in that podcast talked about how we gave back half of our profits in commissions just based on the way we're trading. So yeah. So what broker did you end up kind of choosing?
So I'm still with TD Ameritrade and do all my trading through Thinkorswim, and I remember, thinking to myself about, this $7 per trade was really kind of hamstringing me a little bit, and it made a break-even trade a negative trade, and it made a good trade an okay trade, and made a bad trade even worse. So, it was one of those things that I didn't really do enough trading to justify stepping up to a different platform. So I kind of was just like, well, it's just one of those things I have to kind of live with right now. Because, and again, I still am not actively trading enough to really justify, like a monthly subscription or a different provider. As far as I know, I haven't looked into it a ton. I've just done a little bit of research, but for me, it's more maybe like kind of a comfort level thing. I kind of know the platform, know the system, and feel comfortable with using it. So that's kind of where I am right now.
Yeah, and at a point, it'll get to the point where you're just like, okay, it's abundantly clear right now that these fees are wreaking havoc on what I'm trying to do. So clearly, like you said, as you've identified, you're just not trading enough for it to make that much of a indent in your kind of current strategy and goal of things. So just for a point of clarification, is this all still happening in 2015, or are we sped up? Where are we at in the timeline?
So yeah, I guess it kind of jumped around a little bit. So we are kind of spring of 2016.
Okay.
And I was trying to get through robotic trading. I started working for a buddy of mine doing construction and renovation stuff, and so I was doing a little bit of trading, thinking maybe I can make something work with this, provide enough income. But really, with the amount of money that I started with, that just wasn't feasible or practical. And I was putting a lot of pressure on myself to try to be successful at it without really having, one, the capital to kind of do what I was trying to do, and number two, really understanding clearly what I needed to do, and number three, having the discipline to know when to stick to your stop loss and just walk away. So I really set myself up, I guess, for, I don't want to say failure, but for maybe just unmet expectations of what I was hoping to get out of it. So I started with penny stocks just because of the amount of the, $3,000. I was trying to limit myself to about $500 per trade. And I thought, well, if it's a $5 or less stock, I can at least get 100 shares. So that's kind of what I was looking at trading, strictly with a cash account to begin with. And when I was doing the day trading, I actually had some, moderate success. I made a few good trades early on where I was thinking, hey, I'm kind of getting the hang of this. And I think one of the things that I emailed you about it, Clay, back in the spring. And I said, hey, I was doing pretty good, switched to a margin account, and now I'm doing awful. And it was, you kind of basically said, well, switching to margin, you probably got a little bit sloppy, or, just not maybe thinking things through enough. And, I had more capital now, but I wasn't really trading very wisely. So I ended up, just making my losses bigger than what they were previously. And, just the pure, just lack of discipline to get out of a trade. I would let something completely tank before I was like, okay, now I've got to sell it. Before it goes to zero practically. But so if for a $500 or $600 trade, losing half of that money, $300 or so, just because I was unwilling to set a stop or to stick to a stop loss. The mind is such an incredible thing, but it's also such a crazy thing too. You think going into something, oh yeah, I can stick to this. I'm going to stick to the stop loss. I'm not gonna break. But you just think, well, it's just going to pull back once it hits this point, or it's going to pull back once it hits this point. And I would say, I'm not trying to knock technical analysis, but I was even using some of the technical analysis stuff, saying, oh well, here's a support level. It's going to bounce off of the support level, and it was just kind of at a cliff point, just nosing over and not realizing that just at this point you just need to walk away and look for another option.
Yeah, no, I'm actually glad you brought that up about technical analysis, because there's no such thing as a perfect tool, and we discuss it quite a bit, in the live webinars and such. But there's a catch-22, basic economics. There's always a trade-off, and one of the trade-offs with charting is it can toy with your mind, like you described. You're like, well, what about that? Okay, so and then that thing gets violent. Then okay, well now I see that the chart's telling me that, and then before you know it, because you were using the chart to justify bad decisions, it's almost like the chart led you to bad decisions in the first place. But in all actuality, it's not really the chart's fault. You just chose to use the chart in a wrong way. So that's a great point on your part, and it's a very valid point, because that is one of the, again, with the theme of being self-aware. When it comes to technical analysis or any strategy, there can certainly be pros to it, but there's also going to be cons. And one of the cons is if you're not careful, as you beautifully summarized, a chart can all of a sudden lead you down very dark paths. And Ches, you were doing that with your futures trading and such a little bit, weren't you?
Absolutely. So yeah, you said it absolutely perfect. It was the same exact thing happened for me with futures.
Yeah. So it's a very.
And I found too, just as I look at charts, when I'm kind of doing things now, is if I spend too long looking at a chart, I can imagine all kinds of things, and I can draw lines, and I can make it look like there's something where it really isn't. And so, for me, if I don't necessarily have like hard and fast rules that I play by every day, but one of the things that I always try to keep in mind is that if it doesn't jump out at you off the chart, then you're probably forcing something that's not there. This patterns. I like ascending triangles and symmetrical triangles, but if it doesn't jump out at you, if you have to look at it for 5 or 10 minutes to try to like contrive something, then you're setting yourself up for failure.
That's if you're here right now, I would give you a big hug and just a big man hug. I'd squeeze you. That's Ches. That's
followed by a swift punch in the face.
But that's besides the point. Okay, so I have a black eye now, but so perfectly said. I love you're. I don't really have like hardcore rules that I stick to, but that rule is so amazingly simple, but so amazingly effective. If you're sitting there staring at a chart, odds are you're probably going to make something up. And what we always tell people, and is the case, if something kind of has you confused or you're not quite sure and it doesn't jump off at the page, like Ben said, then you know what? I have great news for you. There's like 5,000 other ticker symbols out there that you can go find another trade that will jump off the page at you. So I love that rule, Ben, and I don't know if anybody's ever really put it like that. Maybe we're in hundreds of episodes now, but that's good stuff, man. That got my adrenaline flowing. I'm ready to give you a big old man bear hug. But you're in Alabama and I'm in Michigan, so I guess we'll just have to do it verbally, but that could get weird. Anyways, I'm getting way off.
Virtual fist bump.
Yeah, there we go. Virtual fist.
There you go. There much better. Much better.
So at this point, I am somewhat swing trading. $5 stocks. Some of them a little bit more than $5 stocks, but with only a couple $100 or maybe $1,000 per trade, I just wasn't. I didn't have a whole lot of shares, and so when it made a move, it wasn't making a very big move, and I would kind of hang on to things longer than I should have. And I just kind of started, realizing that a lot of times these sub $5 stocks, these penny stocks, they just and again, I'm using the term penny stock. I know you kind of reference anything less than $5 as a penny stock, but in that $2 to $10 range. I don't want to say that technical analysis are rules, but if they were rules in that range of stocks, they just don't seem to follow the pattern or play by the rules, and things can go from $8 to $1.50 in one day in the matter of minutes. So I kind of started, as I was looking at this, just thinking to myself of, I'm trying to do the technical analysis, but I'm not sure that the things that I'm going with some of these companies, because of their size or whatever, their share. The cost per share was really a good investment. And I remember feeling a little bit like I understand robotic trading. I really feel like I get it. And, but it just wasn't translated into real results of actually being successful and profitable.
So from that point, where did you go then?
At that point, I enjoyed the robotic trading. I said, let me just jump full in, do the CTU thing, try to get more information, because I was looking at the robotic trading. It was a lot of the, this is what it is, but I needed more of the practical, how do you apply this? And so I remember when I was doing the RVR, especially, that was very helpful in terms of kind of putting some of those pieces together. Because I just remember thinking through the robotic trading, like, I understand this, but I just don't know how to practically apply it and how to make it make sense with what I'm doing in trading.
And I love how you just shot straight and you said, after robotic trading, I didn't really feel like, basically, you didn't feel like there was necessarily a return on investment after just going through strictly robotic trading. Is that pretty much what you were getting at?
Well, I'm not going to say it was like a waste of money or anything, but I
guess my point is, it is a waste of money. It is a waste of money for what you described. And this is what I try to tell people. They're like, so what happens if all I do is buy robotic trading? I'm like, well, think about this. If you want to learn calculus and you're just like, so can I just learn like addition and subtraction, and then am I going to know like how to become a calculus whiz kid? No. Robotic trading, if you have zero knowledge of how to trade and you think that all you can do is buy one piece of the pie the whole pie being Clay Trading University, then it's going to be a waste of money. And maybe that's bad business. I don't know. I don't care. But you can't skip out. You can't, okay, well, I'm going to do the bare minimum, and the bare minimum is the introductory class. No,
it's like one puzzle piece on the grander scheme of the entire puzzle, and you can't see the whole picture. And what you're saying, I love what you said, Ben, because I mean, I deal with people all the time who, just like Clay was saying, can I just get robotic trading? I say, you can surely start there, and you'll surely learn a lot about charting, but using it, especially, I mean, in my opinion, the only thing that really matters in trading is, first off, how you read the chart, but secondly, how you manage your risk. And the RVR course, like you said, that's easily, hands down for me, my favorite course. Even though I trade extensively advanced options, the RVR course is like the practical use of how to succeed long-term trading. So I'm very glad you decided not only to pony up and go with the university, but I'm glad that RVR course kind of opened your eyes to pretty much applying it to a trade plan, because I think that's where most people struggle. Clay, would you agree that their trade plans sometimes are lacking? If you lose one and make one, and your win percentage is low, you're not making money long term. You're losing money. So I'm glad that kind of opened your eyes.
And to use a fishing analogy, so robotic trading is like, all right, here's the fishing pole. That's what that fishing pole. That's what that part of it is. There's the real.
Good luck catching a good one.
This is where you put the string. This is where you put. Okay. But how do I actually use the thing? I understand all the dynamics of it. I understand all the pieces of it. But how do I use it? RVR trading is kind of like, okay, now you're gonna, I'm not a fisherman. This is the word. Lasso it back's not the right thing. You're gonna put it over your right shoulder and you're gonna cast it. And if you cast it, then you're gonna start to watch the bobber. And when the bobber acts like this, and you maybe feel certain things like that, that's what RVR trading is. It's more of how to actually put what you learned about the pole into action. So, and that's why it's, again, Ben, the way you describe things is exactly it. That's why, no, if you want to learn how to become a trader, then you got to take the program. And the program is not just taking the introductory course, or else you're going to feel like Ben, which I thank you for trying to be polite. But at the end of the day, you were basically saying, well, this was kind of like a waste of money, because sure, I learned how to read a chart, but how to read a chart and how to use a chart are two very different things, and you got to take that next step. Is that kind of a fair statement of what you're saying?
It is, but I still go back to robotic trading a lot, just with the support and resistance stuff. Even so, I don't want to fast forward too much. I kind of try to get there at some point, but I'm just mainly doing options right now. And so a lot of times, even when I set my stop losses, I'm just using not necessarily a moving average, but a support level that's usually a little bit lower than a moving average. But again, I don't want to try to get too far ahead of where I'm at right now. But I still find it valuable, but it was in a way it was somewhat disappointing. Like I was hoping for a little bit more than this, and I think that's kind of where RVR and a few of the other courses kind of helped to fill that void. So I remember at the time thinking, I didn't have the money for this. I bought it on the PayPal credit thing. Thinking, hey, this is going to be a good investment. I'm going to pay this back before that 6 months is even up. I'm going to be doing so well trading, and got a little bit overconfident in that. And just slowly over the course of the summer, remember seeing my trading results just not really matching up with what my expectations were. We were getting kind of in a financially tight position, living on a lot of credit. Started working full-time for, again, just doing construction, home renovation stuff, and just being really disappointed that things weren't panning out. And at one point in the summer, I was like, this was just a complete waste of money. And I was down about $2,000 from that original $3,000. I had the $2,000 in CTU, plus a couple $100 for buying the robotic trading up front. And I was thinking, I'm just going to chalk this up to like a $4,000 life lesson of, hey, this isn't for you. Try to do something that you can actually just earn money at. And I took a break from it over the, toward the end of the summer and the fall, partly due to time and partly just because I was ready to kind of give up on the whole thing.
So that brings up an absolutely good point, because I want to, first off, I was in the same boat as you in terms of my expectations for how long is it going to take me to be profitable. And we've touched on this in other podcasts too, in the sense of...
We touched on your podcast, the second video one.
So the thing is, though, is that there's no way every single person will find their groove and find where they fit specifically in the market, because there is no one size fits all. Like I said in that podcast, I tried to trade the 2 minute like Clay, and I completely failed and flat on my face, like miserably. But I found that as I widened the time frames out, changed the vehicles I was trading, that was where I fit. That's where I'm comfortable in doing that. And breaks aren't a bad thing at all. But the point I want to make about this break is, not only did you say you're ready to chalk it up to a $4,000 life lesson, here we are in, June of 2017, and you're doing a podcast. So did you still have a drive to get back into the market after that break? Did something draw you back in? Because I don't think you'd be here doing this podcast if you just were chalking up the lesson and then never signed back in and had any interest in trading.
Yeah, so I still was interested in it. I believed in the technical analysis. At times I think like you guys are just a bunch of crazy people with some kind of scam that you're just, taking money from folks and just walking away and laughing at all of us. But, when I come back to the end of the day, I go look at a chart and you see something bounce off of a 200 period moving average and then just kind of go back up, or you see it hit a resistance level that was a previous resistance level, and the charts kind of validate what you are trying to teach people. And there's still times when I feel like, hey, maybe this isn't all it's cracked up to be. But at some point, I remember thinking, with the amount of money that I'm doing, like these penny stocks aren't gonna work. They don't follow the rules quite as nicely. You can have a really bad day or a really good day, and the chance of having a really good day seemed to be a lot lower than having a bad day. So I just said I needed something that was more consistent, maybe a little bit easier to, I don't want to say predict, but to kind of have a little bit more
fluidity. You wanted charts to act more in a fluid way.
Right. So I was like, I needed something that had a decent volume, and I needed something that was going to kind of play by the rules necessarily and not be upset by outside forces, such as a lot of those penny stocks are these biotechs, and so they get some kind of news release, PR release, and it tanks $2 or $3, a share on a $5 stock. So I wanted something that wasn't going to have that volatility. I remember being intrigued by options and thinking, maybe the options is kind of the way to go. You do the video on, trading options with a small cash account and how, it's feasible, it's possible. So at some point I remember thinking I'm just going to get back into paper trading, and that's, I'll just try to paper trade, see what I can figure out with options. I tried to go in through the options course, the basic options course, and did that over the space of about a month or so, just in between life and working and everything else. And the thing I remember thinking about options was, it was one of those things where it can be very profitable, and it seemed like as long as you were having some discipline, it seemed to be a little bit more of a, I'm running out of words here, but maybe seemed like something that I could be more successful at.
Yeah, because you realize that options. Correct me if I'm wrong, but sounds like you were in the search of, the kink in your armor, and the kink in your armor was basically liquidity. At the end of the day, you wanted things with more volume, and you wanted things that didn't depend so much on binary events. I mean, pharmaceuticals, you're actually a biotech. The announcement date of whether or not this gets approved, that's very binary. It's either it gets approved, booyah, or it doesn't, and see you later. So you were on the quest.
How I got burned with AVXL too was,
right.
One announcement, and it's, and that happened over the course of a couple times, and so it was one of those things where I needed something that wasn't going to just be so easily manipulated by outside forces,
right?
Or even inside forces.
Yeah, those binary events that's where it's not quite trading at that point. There's a lot of gambling that comes into it because you're either right or you're wrong, but you're also, like you said, in search of volume or liquidity. So and options have that, because when options are based on big board stocks, and assuming you're going about it the right way, then you're going to land yourself in options that are very fluid, where charts obey the rules a whole lot better than what they would in, what Ben has previously described. So did you get pretty active with the options day trading? Or because I know you're doing advanced right now, but what was your experience like after kind of going through that options course?
So after going through the options course, I started doing the advanced options course and just kind of wasn't really I kind of realized I needed to just kind of stick with some of the basic stuff at first, and I started doing some paper trading, and just trying to see where the best return for my money was. And I remember looking at, specifically when I was paper trading, I was doing a lot of the weekly options, and it was sticking with, kind of big name stuff, Apple, Facebook, Tesla, Netflix. And I found that in my paper trading that I was actually pretty successful, and I didn't really keep track of dollars and cents how much I was up, but I remember doing a couple trades where I bought a certain number of contracts. I don't know if it was 5 or 10, again, paper trading, and each of them at a different strike price, some in the money, some out of the money, and watching how the price of the option reacted to the movement of the price of the stock in the chart itself. And I remember seeing that it seemed the biggest gain in terms of percentage was the options that were right around the out of the money that went into the money. And so I focused on just long options, calls, not doing any puts or any shorting, anything like that, just strictly buying and selling calls. And once I saw that, hey, this is working out a little bit with, just paper trading, I started doing a little bit here and there of actual real money trading. And again, I'm back in the fall of last year. The guy I was working for ended up asking me if I want to start a business. So I've got a home renovation business now. My wife and I are trying to start a farm. I've got another little side business that I do. So I'm full throttle every day trying to do stuff. So my time to put into trading is much like Diego. And I really enjoyed his, when he shared his, I don't know if it's a podcast or webinar that he did.
That was a webinar, yep.
Yeah. And again, those webinars are one of those things that I kind of go back to when I just need a practical example. And it helps me to, look through things that kind of put my answers out there. Because, that's one of those, for me, it's a confidence builder because you're going through and asking people to put in numbers or where would you be at this point and what are you thinking? And usually for me, it's kind of saying, okay, I do understand this. I do kind of get it. There's a few, I'm not getting every answer right or not playing it exactly right, but the principles I feel like I have a grasp on. So again, hearing his story of how he's, at night kind of setting up his trades and in the morning, executing his plan. I mean, that's what I'm doing right now is I'm basically day trading monthly options. I'm sorry, swing trading monthly options that are, about anywhere from 2 weeks to a month out. Just trying to, again, stick with big name stocks, Apple, Facebook. It was working pretty good up until last week. Obviously, things have kind of fallen apart a little bit there, and I've gotten stopped out quite a bit. So trying to figure out, again, what my goal and strategy is, how I'm setting up my trade plans. That's still a work in progress. Even with options, trying to figure out how to set a stop loss, because I'm doing a lot of conditional trades. I've got to set a price if it hits this price, or if the underlying asset hits this price. If the stock actually buys, then I'm doing 2 or 3 conditional orders underneath of it. So some of that's frustrating just because you can't react to the how the stock is moving during the day. I can only see it when I come back home at night or in the morning before I go to work. But so there's still a lot of kinks that I have to work out. But the thing that I emailed you about recently was just the Apple trade of an Apple call, 3 Apple calls that I bought, and it was just one of those things where the chart just kind of showed itself and just kind of followed the principles and turned out to be a very successful trade. And so I guess the point where I'm at today is just trying to keep my expectations in check, maintain discipline of adhering to stop losses, and still trying to figure out what my strategy is for my kind of current situation.
So not to cut you off, but the Apple trade went very well for you, and because like I said, I specifically remember that email, and things sure last week, but as Ches already noted, within the context of things just went crappy last week, and it is what it is. That happens in the market. So kind of fast forwarding to where you are right now. Correct me if I'm wrong, but it sounds like you're in total beast mode. You're in total, hustle mode. You have a business that you started. You have, some side stuff, and you're trying to trade. So at this point, you're having success with options, but it's not like you can sit here and say that all your income is coming from options, but nor is all your attention going towards options right now. It's you're in the middle of trying to balance all these different income sources, if you will.
Yeah, absolutely. And we're just trying to kind of still figure out what direction we're headed in as a family and what our goals are. So I don't want to just jump. I don't think I have the ability or the knowledge or even the capital to jump into trading full time. But it's one of those things I want to continue to work on to try to see if I can, just make it maybe a little bit of income to help provide for our family. I'm not one of those people that I got to get as much money as I can. I just want to kind of take care of my wife and kids, and if I can do that through trading, for me, that's at the end of the day, that would be success for me. Just being able to kind of help, just take care of our kind of day-to-day needs. So it's one of those things I'm still working on. I'm probably going to stick with the options, maybe venture into puts a little bit. I don't know if that's just this past week affecting my thinking or whatnot, but
it is.
Yeah, just trying to think of.
Just it happens. You just gotta push through it. Last week was absolutely crazy.
So, but anyways, yeah, I feel a big part of the whole trading thing is just confidence and trying to build confidence slowly, incrementally. Having successful $10 trades is still a successful trade, and it's one of those things where you either made a good call and got out before you got stopped out, or even if it ran past that and you could have made more money, you still made a good call because you have money in your pocket at the end of the day. So building the confidence and trying to be successful on a regular basis, not just hit or miss here and there, I guess is kind of where I'm at right now. But yeah, the options, I like it. I got a small account. I think anybody jumping into trading, take the time to invest into the course on options, buy all of them, but the course on options, especially, paper trade it, try to figure out what works best for you. But that seems to be the best return for my investment at this point.
Yeah. And at the end of the day, sure, you're throwing out numbers like $10, $20, but that's not the point. That's not where Ben is right now. Ben is in building good habits, because blind luck, that's not scalable. You cannot scale those numbers larger if it's blind luck, fool's gold, what have you. But when you have good habits, good systems, a strategy that works, good habits are scalable over time. And, that's the name of the game as traders. So I realize all the late night marketing that some use. Oh, unless you're being able to, do this or do that or buy that or travel there, then it's not even worth your time. You're stuck as a trader. No, build good habits, because those are scalable for the long term. And yeah, you're in a good spot. You have plenty of income coming in from other areas. And, worst case scenario, options trading is just something that provides additional stream of income. I mean, we have plenty of people on here that have jobs and they just enjoy a little bit of side income from the trading. So there's no shame in that either. But I'm just curious, as a statement that you still, if it's not jumping off the page on me, then you're probably going to force a trade. You're probably going to do something stupid, because that was so beautifully said. So, last question before Ches lends you his time machine, but what is on your chart exactly? What, are you using that would have to kind of, jump off the page at you?
Basic robotic trading stuff, support and resistance. And then, like I said, I stick with a lot of ascending triangles and symmetrical triangles. To me, I don't know why. It just seems like they work out, especially with some of the big name stocks. They seem like they have the most consistent results. And if it breaks through that pattern, high or low, it's pretty clear, generally speaking. So I guess that's kind of what I'm looking for when I open up a chart is a lot of resistance or a lot of support at a certain level, and then some other type of pattern, specifically those triangles.
Awesome. Well, Ben, it's been an absolute pleasure having you on. Thank you for pushing through the technical difficulties that we had earlier, and for obviously clearing your schedule to talk with us today. But I do know the real reason you came here was to borrow my time machine, so I can definitely ship it down to Alabama. The question for you is, if you could go back and give yourself one piece of advice, what would that advice be?
And not to get too spiritual on you, but my beliefs kind of govern everything I do. And so I would say, if I go back in time and tell myself anything, it would be just to trust in God, that He'll take care of you. I know maybe that's not the answer that most people would give, but for me, that's the one thing that has continually surfaced in my life is in regards to everything I do, whether it's work or family or military, trading, everything else just kind of seems to be captured under that one umbrella.
There you go. And you can say whatever you want. You're the one that took time out of your day. So if that's the answer to the question, then that's the answer to the question.
That is my final answer. So
there you go. And that's, well said. And hey, if it works for you, that's the name of the game. And I'm pretty sure Ches and I have said that in many ways, is find what works and, you got to go with it. So, and I like answers that we haven't heard before. So there's nothing wrong with that at all. Now, this is where things actually get serious. Okay. Are you ready?
Yeah.
I mean, I know you've had military training, but I don't know if anything's prepared you for this.
Right.
What is your favorite movie?
Hands down, it's going to be The Princess Bride.
Oh, my wife.
It is a classic.
You guys would get along just well. What is the line in... okay, never mind. I ruined that. I can't remember.
I can tell you my favorite line in that movie is when they're in the boat and the guy's following him, and I can't remember his name. Anyways, the Spaniard, he says, "I wonder if they're using the same one we're using." And I don't know, just for whatever reason, that just always makes me laugh. So.
Oh, why can't I think of I mean, I know the ones when my name is Diego Montoya.
Yeah.
And it keeps saying, that's...
my father prepared to die. Inconceivable is what the guy always says.
Inconceivable, that's what it is. Inconceivable, yeah. So, and then, of course, the poison scene, that's kind of like trading in a sense. Like an overanalyzed trade plan is what I would equate that scene to, where he just totally overthinks it and...
And, I always think, I know you say a lot of times that the stock market is not necessarily a casino. In some ways, I think it is, but I feel like with the technical analysis thing, if you're using the casino analogy, it's more like reading or counting cards like at blackjack. And, you're up against the house a little bit in a way, but if you're counting cards, you have a reasonable chance of success.
No, I would agree with that. I mean...
all we can do is try to put the odds in our favor. We have no idea what's really going to happen next.
And I would argue if the odds can be put in your favor, it's not gambling, because from that sense, crossing the street is gambling. But a good way to put the odds in your favor is what we're taught as kids. Well, look both ways before you cross the street. So you eliminate or reduce the probabilities that you get steamrolled by a semi-truck. So, Ches, you're up for the next question.
Now, your military training probably did train you for this, but what is your favorite meal and dessert?
Snakes, beetles, grasshoppers.
Not quite.
Tear gas to wash it all down.
I generally like anything. I would say probably steamed shrimp. Just where you have like a whole pot of steamed shrimp with Old Bay seasoning. I'm from Mid-Atlantic region, Maryland originally, so Old Bay is kind of popular in that region. So if I had a whole, I don't know, like a giant pot full of steamed shrimp, I'd be pretty happy. And then my favorite dessert is, I would say it's tandy cake. It's kind of like the tandy cake things you buy in stores. I just had a birthday. My wife made me a tandy cake for my birthday. So
happy birthday!
I appreciate it. Yeah. So my mom used to make it growing up. It's one of those things, but that's more of a, I don't know. I don't have that as often. Chocolate chip cookies, you can never go wrong with that either.
That's just pure America there. I mean, you might as well put chocolate chip cookies right next to apple pie. So
right.
Final question though, 3 words, and these 3 words need to be what you would associate with successful trading. So what would those 3 words be?
Consistent, disciplined, and humble.
I like humble. I like all 3 of them, but humble is definitely... humility goes a long way in the market, that's for sure. So, well said there. And, great discussion, great answers, and a lot of kind of tangents that were your fault, but in a good way that I think brought up some really good talking points. So, assuming you'd be willing to come back at some point down the line, definitely want to have you back just to kind of hear, because you're in a big juggling act right now, as we've learned. So it would be interesting to see how this all continues to unfold for you. But to kind of echo Chez's point, it's amazing how things have gone from, this is just a $4,000 life lesson, to now here you are back in the game, doing well, and just, hustling and, doing what you got to do to create some income stream for yourself. And, at the end of the day, you like a challenge. Trading is a challenge. So it's not like you're doing it all out of greed or anything like that. You just, Yeah, you just you want to challenge yourself, and that's what trading certainly is. So would you ever come back to update us on things?
Yeah, absolutely. I'm hoping it's going to be for the positive, but yeah, I'd be interested in coming back, and I just appreciate the opportunity just to kind of share my story so far, and hope it just helps resonate with somebody else.
Oh, it will for sure. There's like I said, and that's just not me talking out of my backside. There were a lot of good talking points here that will indeed help people. And heck, even if 10 people hear it and 9 people think we're all crazy, but it helps that one person, I think, well, that's a pretty cool thing. So thank you again for hanging out. And yeah, we will definitely have to get you back on and hear more about how things have all unfolded. For you as listeners, a few final things before we go. If you're listening on YouTube, make sure to click that like button and check out the remainder of the channel. Lots of other good videos and such there. And hopefully you ultimately decide to subscribe. If you're listening on the website itself, click that share button, leave us a comment down below. We will read those and reply. And then finally, if you're listening on iTunes or any of the other podcast players, especially on iTunes, if you could leave us a rating, that really goes a long way in letting Ches and I know to, hey, guys, I'm enjoying. Please keep making these. So thank you to our esteemed co-host, Ches. Thank you again to Ben for taking time out of what we learned was a busy schedule. And thank you to you as listeners. We will see you back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.